So I just got back from seeing one of my longtime clients. I've been working with them almost since I started my practice before the turn of the century. And every month, like clockwork, I still go down to their offices and get on their QuickBooks, and wanted to tell you what it is that I do. So whether you are a business owner wondering, well, what could you be doing with now the QuickBooks that you have in-house, or a business owner that's receiving reports from your tax professional or bookkeeper, what do you look at? What is it that you're wanting to pay attention to? Or fellow tax advisor, maybe listen in on, well, how does somebody else, me, go about looking over a client's books? And then what do I do with that information when I meet with this client every month?
JJ, the CPA is here.
JJ, the CPA here. Hope you're doing well. So when I go down to this client, and they've become great friends. I've been working with them now about 25 years. And with that, it's always a pleasure to go down there. Now, a couple of things, tax advisors, if you or your staff are going, a couple of things just to note that really has nothing to do with financials. But I always make sure I got a mint to make sure I got good breath, okay, going in to see a customer. And if I have staff doing that, I say, hey, make sure you got fresh breath. The other is, I don't park where customers would park for my client, because I'm not a customer. I need to park far away from the front. The other is, I'm going into my client's offices, so I need to be respectful of their space, ensure that when I exit their offices, that any drawers I pulled out, any pins that I used, any chairs that I pulled out, any programs that I opened are shut down, put back in place, pushed in as though I had never been there. Now, with that, the etiquette, what I do when I get out there is I pull up an income statement, a balance sheet, as well as the general ledger. Now, let's just say, for instance, you're out there in October. Well, then what I'm going to be pulling up with the income statement would be January through now October. And on that income statement, I'm going to select for me to know what percentage of the income is going to the expenses, which is an option in the customizing of the report. Now, I'm going to ensure I'm doing it on tax basis, which for my clients is cash basis, to make sure I'm looking at numbers to then use these for tax estimates. But one of the things I'm looking at on the income statement is, do I see any anomalies? Because it's easier to see anomalies sometimes when you see a percentage of the income. So if the income is $100,000 and there's $10,000 in advertising, then I'm going to see that 10% of the income went to advertising. So if I'm seeing month after month, you as a business owner, you're seeing your numbers, tax professionals, you see your clients' numbers. I see something that looks out of whack. Well, now I'm taking note, and it's something I might want to investigate. The other thing that I'm going to do next is, with that income statement, I'm going to select to compare it to the same period in the prior year. I'm also going to select in customized reports the difference in dollars. So it's going to now pull up in one column year to date, and then in the next column, it's going to pull up the same dates in the prior year, and in the third column, it's going to tell me what is the dollar difference between those two. So if this year the advertising is $10,000 and last year it was $25,000, well, then I'm going to see a difference of $15,000 less spent. So this is also going to give me an area of interest to further investigate or talk to the client. So I'm just kind of basically warming up and getting an idea of what I've got in front of me. The next thing I'm going to pull up on the income statement, so now it'll be a third income statement that's pulled up, is I'm going to pull up a full 12-month P&L. So if I'm out there in October, that means that we've got numbers through September. So I'm going to run an income statement that would be from October of last year through September of this year, which would be 12 months. And the reason I'm doing that is now I have a full picture of a full year. And this is going to be a great indicator of what we might be looking at for the year. Now, you could do this whether you're in February, May, July, or October. And I'm also going to do then that same thing that I just told you with the year to date. I'm going to now also pull up well, what was the activity, the income and the expenses, for the prior 12 months? So now I have two columns. Column one is the most recent 12 months, full 12 months. And that second column is then a comparison of the previous 12 months. I have 24 months to look at. And I'll do the column showing the dollar difference. Again, now I'm looking for anomalies. Next, I'm going to look at that balance sheet. And more what I'm looking at on a balance sheet is, do I see negative assets other than accumulated depreciation? And if I do, that's an area of interest that I need to take a look at, because assets typically aren't going to be negative. I'm also going to ensure that I don't see any negative liabilities, because if there are, well, that shouldn't be the case. And now I have a point of interest to investigate. Again, sifting my fingers through these reports to get started. Next, I'm going to look at the general ledger. So for the general ledger, I'm going to look at back to the beginning of the year through the date that I am out there. So if I'm out there in October, I'm going to look at a general ledger from January 1st through the day that I'm here, or maybe through September 30, if that's what they have it reconciled through. See, the general ledger now is going to give me the details that make up the numbers on the balance sheet and the income statement. And it's actually, in my opinion, the most important report that you look at. You should always be looking at your general ledger. You should ask for the general ledger. You should be providing the general ledger, tax advisors. And when I'm now looking at that general ledger, I get to see, well, what are the specific expenses that made up the $10,000 in advertising that was spent this year? So it may be that it's 4 transactions, one for $9,000 and the rest that make up the $10,000. I can see who actually was paid for that advertising and the date they were paid, and in the manner, whether it was a check or a credit card. So because when I first sat down and I was looking at the income statement, the comparisons and the balance sheet, I might have some areas of interest. So now when I'm going through the general ledger, I'm now going to, in those accounts that there may be some investigative looks that appear to be needed, I'm now going to be able to look at the detail and see what is the issue potentially that's going on there. Now, when I'm looking at the general ledger, note this: any general ledger is going to be in this order. It's going to be in the order of the balance sheet from assets to liabilities to equity. And then it's going to continue on to be the detail of what makes up the income, and then the detail of what makes up the expenses, followed by other income and other expenses. So now when I'm looking at the income statement and I see, again, $10,000 in advertising, well, I can go right to the general ledger in the area where all the expenses are, and now I can see what makes up that amount. And what I'm also looking at the general ledger is that if I'm looking in advertising and I happen to see that there's $1,000 to AT&T, which is a telephone company, well, then I go, well, I don't know if that is advertising. Is it? Might be a question to ask the client. Now, I might be looking through the general ledger and I get to office supplies and I see an expense that says Marketing USA. I might go, wonder why that's in office supplies, Marketing USA. Maybe that's an advertising cost. See, when you go through the general ledger, you're helping ensuring that the classifications on the income statement and the balance sheet are useful, helpful, correct, many times consistent with general understanding of what advertising or office supplies is, consistent with how it would be reported and classified for tax purposes. So when I'm looking through the general ledger, I'm now seeing what makes up the totals that I'm only seeing on the income statement and balance sheet. See, when I look at an income statement, I have no idea how that client got to $10,000 in advertising. So by looking at the general ledger, now I'm going to know. So now I'm going to produce these reports if I have some adjustments to make for matching up payroll or matching up depreciation or looking at reclassifications of expenses, or maybe I know, well, that AT&T needs to go to telephone, move it out of advertising, and that Marketing USA, I know it goes to advertising, and I go ahead and move it there. But now I'm going to produce these reports, and when I sit down with the client, I've been familiar with the numbers, went through the general ledger, and now I'm going to go through those financials with the client in the same manner that I just told you. So when we're now looking at the income statement, What we're looking at is, well, what has been collected for the year compared to the prior year? What has been collected in the prior 12 months compared to the prior 12 months to that? And while we're looking at that, we have the general ledger over to the side, and we can be looking through the detail to go, okay, your gross income is $100,000. So in the general ledger, we can see what makes up that $100,000. Then when we go to the next line item, advertising, and the next one, and the next one, and the next one, as the client is looking at this, as they may have questions, or I have questions, or inquiry, and we're doing comparisons, these numbers now come alive. They pop out because we're looking at them in different ways, different time periods. And by knowing the details of what makes up those numbers, a client or you can't help but be more interested in these numbers. Because if you're now going through the general ledger and you're like, yep, that's all advertising expense, yep, that's all office expense, and everything looks categorized correctly in the general ledger, now when you're going back to the income statement and balance sheet, you can feel very confident that those are numbers you can rely on, so to speak. And first and foremost, my clients with their financials are using them for management purposes. So they're trying to make decisions. How well are we doing? How is cash flow? One of the key reports that we look at is also on that 12-month, meaning the prior 12 months on that income statement, is that we break it out to show the prior 12 months month by month. So if I'm in October, I'm going to produce an income statement that's going to be month by month. That would be October of the prior year through September of this year. So that's full 12 months. And now I'm going to see all the months that come into play. And when that happens, now I'm going to be in October, and because I'm looking at the prior 12 months, I'm going to also see what last October was, last November, and last December. What to expect. When we're doing now tax estimate, the next step, and I'm saying, well, what do we think the year is going to look like? Well, we have a report that's the full 12 months and the prior 12 months to that. That's a great indicator, as I told you. Now we're looking at the month by month and we're like, well, what is the outlook for the remainder of the year, even if we're in May? Well, this is what you did in the prior year for the upcoming months. What are your thoughts? Do you think it'll be similar? Yes, no? Also, when we know there are anomalies, we know that, well, maybe those aren't going to occur. Maybe a client spent a whole bunch on advertising, but it was a one-time deal in the prior year. So by being aware of that and looking at the general ledger and talking to the client, we go, well, we know that you're not going to have as much advertising expense this year, and therefore you're going to have higher net income for tax purposes. So what we're using these numbers for as well as a CPA and a tax advisor is then trying to come up with what do we believe the net income is going to be for the year. Why? Because we're trying to now plan for what the taxes are going to be based on that projection, which is a calculation. So if we're now looking through the numbers, we've now done a projection, we go, well, we think the net income is going to be $25,000. Well, if we know that net income, we can then determine, well, what's the tax going to be on that down at the individual level? That's tax planning. But really, you can't get to the sizzle until you've done all of that, being familiar with your numbers, ensuring that things are classified correctly, and then knowing what your taxable income is going to be to then know what your tax is so you can plan for that, plan for it even just for cash flow purposes and ensuring you have those dollars set aside. Planning to ensure you're not overpaying your tax. Maybe you don't need to pay in as much in a future estimate. But the strategy comes into, now that we know the numbers, now that we know the net income, now that we know the tax, here's a tax strategy. What can we do about it? And what we determine we can and cannot do about it is now the strategizing. So what then would be the tax strategies? Well, tax strategies are, what do we think next year is going to look like compared to this one? What's our cash flow now? What will it be at year end? How do we want to manage, ensure that we still have money to run our business, but are there things that we could do to minimize the tax, which really only comes down to spending money. And I'm never going to tell a client to go and spend money just to get a tax write-off, because a tax deduction does not save you taxes dollar for dollar like a tax credit. A tax deduction is only going to be worth whatever the tax rate is. So if down at the individual level, blended rate is 25%, well, then we know if somebody's netting $100,000 of net income, well, their tax is going to be $25,000. But we wouldn't now want a client to go out and spend $100,000 to zero out their income to save $25,000, because you did the math yourself right there in your head, I'm sure. They spent $100,000 to zero out their income, but it only saved them $25,000. Now, there may be circumstances that makes sense, and when would those be? Well, that $100,000 that was spent, gonna have to spend it anyways. It was purchasing equipment that they need or will need eventually, sooner rather than later. So then it's looking at, well, what can we do about it? Is then being aware of your numbers, what's coming up, well, what do we want to do about it? What's our cash? What's our available credit if that's going to be used? And then ensuring that you're not using tax strategies that then put you behind the 8 ball once the tax strategy is implemented. See, a tax strategy is all about basically doing the setup and going, okay, now we know what the layout is here. So before we do anything, if we were to move this game piece over here and this game piece over there, now what does it look like? And before action is taken, you can go, oh, yeah, we don't want that game piece over there because we're not going to have the cash flow to make that happen. So tax strategy is, yes, spending money, but doing it then strategically and wisely. What would be the strategy behind spending the money? Wanting to ensure that you're saving taxes, but not just blindly throwing a dart at the board, trying to save taxes, going, well, I guess I'll go just spend some money. What you're looking at is, well, is your income going to be higher next year? Would that tax deduction actually be more valuable next year? Should you buy that equipment this year or maybe next year? Now, this would only be in a circumstance that you need that equipment soon. But if next year you know your income is going to be higher, and let's say your blended rate is 30%, well, you go, well, maybe I want to buy that equipment next year, get that same $100,000 deduction, but next year it's going to save me $30,000 in taxes. And now we have a strategy. So this is what I do with that client every single month. And it's a ton of fun getting caught up with them. And part of the meeting, after we talk about what are you going to do about it, I then just ask a series of questions. And those questions are, what is your outlook for the rest of the year? Are we having any changes to any kind of strategy with employees or advertising? Are there new business ventures coming in, et cetera, et cetera? So it's asking a lot of questions. So for tax advisors, it's just asking a lot of questions. For those business owners, and you say, well, I'm not getting that from my tax advisor. Well, take the bull by the horns. You want to be more interested in your taxes than your tax advisor because they're your taxes. They're your numbers. We don't ever sit around and go, well, my dentist never calls and checks on me to see if I'm flossing. He or she doesn't ever call and give me tips on a new way that I could brush my teeth or some new toothbrush. So my dentist sucks, right? We would never say that, right? So my point is that what do you do with the dentist? You go to them, right? And maybe you go to them before you have the toothache, or if you have the toothache, you go to them. But you're more interested in your teeth than your dentist is, even though that's the dentist's job. Your accountant is interested, but you have to be more interested. And therefore, by you knowing your numbers and understanding these things, then you're able to make better decisions. So if you have a tax advisor and maybe this isn't the relationship you have with them, you don't necessarily need to throw in the towel. Now basically say, I'd like to get together with you and bring your financials, or say, bring the financials that you're preparing. Let's go through it. Tell me about the income statement. Tell me about the balance sheet. What do these numbers look like? What's the general ledger look like? Now, many think this turns into a discussion of, well, I think you're spending too much on advertising. That has nothing to do with any real discussions I have with my clients. I don't have idiots for clients, and I doubt you're an idiot. And as a tax advisor, I doubt you have idiot clients. Wink. With this being said, this is not a time to just now go, well, I think you're spending money right. I don't know what else we can do. This is now looking at the numbers, being familiar. What is the relationship? What are the numbers made up of? Are they categorized correctly? Do you want to spend that much advertising? Does that advertising yield you any kind of benefit? And for business owners, using your tax advisor as a soundboard, as maybe somebody that's kind of sitting there with you. And you go, well, I don't want to have to pay for that. And all I can say is, well, then I can't help you. Because you don't say to your dentist, well, listen, I got a drill at the house. I can go right in the garage and get my own drill. Why would I want to sit here and pay you to come and drill out this cavity? Or say, well, why are you taking an x-ray? I know I have a cavity because it hurts. So I know I have a cavity. Why should I pay you, dentist, to do an x-ray? Right? Do we ever do those things? No, we don't get a drill to take care of our own cavities. And we wouldn't question a dentist that wants to take x-rays if our teeth are hurting. So with a tax advisor, what you have to look at is you're going to get what you pay for. And what you want to do is spend time with your advisor. Having a client that says, well, they don't ever call me with any ideas, I always then say, if somebody's coming in, well, when do you ever call them? Because it's really your taxes. And when we then sit down and go through the numbers, by going through the numbers, you get more interested. You go like, well, wait a second, is Marketing USA advertising? Business owner may say, well, I don't even recognize what that is. Oh yeah, that was that. You get more interested. How often do you do this? Monthly. You also want to go through and match up payroll reports to what's being reported to the IRS and make sure they're matching up to the financials. I actually go through our clients' bank statements. Now, I'm not going to be able to detect fraud if there's collusion and if there's been forgery and all that, but I'm going to be looking at the bank statements. So small business owners, you have no excuse. You got 5 minutes to look at a bank statement. You can go online, get it on the app. What's your bank statement going to tell you? Everything that is on those financials that we just talked about. It's just not in any categories other than money in, money out. So that bank statement is now categorized to go into income and expenses or assets or liabilities. And to see how the bank statement and the inflow and outflow, the deposits and the checks and the debits and the credits, how was all that categorized is then in that general ledger. So see, you know what these numbers are. So small business owners that say, that's just, I don't know what any of that means. Sure you do. It's your business. It's your numbers. And what now allows you to know what is these numbers is that general ledger. So think of it this way. You could look at a bank statement, okay? And tax advisors, you could look at a bank statement and you can go, yeah, those deposits are probably income unless it's a loan or a contribution from the owner. That's probably income. Okay. So if I had deposits of income of $5,000 for the month, then maybe that should show up on my income statement. Wow. Okay. Now I know. And I saw the detail. Now you're looking through all the checks that were written and all the debits. And there's a description. AT&T, it was an automatic debit. Oh, yeah, I see that in the general ledger. Telephone right there. It's in there. Oh, and Marketing USA, we wrote a check to Marketing USA. Oh, yeah, that's right there in the general ledger. And now that's in telephone expense and it's an advertising expense. And now you know your numbers. And why do you want to know your numbers? Well, are you running a charity? Is your clients running charities? Maybe. Okay, but no. So small business owners, they sometimes think, okay, I'm going to go out. I've got my fishing boat. I got my fishing pole. I got the net. And as fast as we can, we're going to get out there and we're going to throw our line. We're going to get the net. We're going to bring it in. And then we're going to throw our line. We're going to bring it in. And we're going to throw the line. We're going to bring it in over and over and over. And then somebody says, hey, I'm hungry. And you go, okay, go take a break. Somebody's like, hey, can we go to shore? And you go, yeah, in a little bit. And then customer calls and said, hey, when are the fish going to come in? And you're like, oh, yeah, we're working on it. And then a vendor calls and says, hey, do you need any more bait? And you're like, yeah. And all the time you're throwing the fishing pole out there and the net and you're doing all this and you're doing all this. Well, if you don't ever turn around and count your fish, you might be bringing in so many fish that they're going out the other side. Or you might be like, well, we got enough fish. Why don't we head in? Or, we need to keep out here because we don't have enough fish. So every once in a while, you got to turn and count your fish. You can't just keep fishing and fishing and fishing and fishing and putting out problems. You got to look at your numbers. You got to count your fish. So if you count your fish, you know how you're doing, right? And here's the thing. The most important thing you're doing is bringing in money. The second most important thing you're doing is ensuring that the money going out the door is necessary. And that includes money going out the door for taxes. So by being interested, by being aware, by sifting your fingers through, you're going to run a business better just being better aware. Now, I have business owners that say, oh, yeah, I know everything that's going on. I got it right up here. I can see the bank statement, this and that. Great. And I say, well, how much did you gross last month? They're like, gosh, I don't know. Well, how much did you spend on advertising? Gosh, I don't know. I was like, boom. That's why we got to see the financials. So I say, that's awesome that you know everything that's kind of going on and you're checking your bank balance every day and you see what's going in and out. Great. Because you're then familiar, but you're only familiar for that day or just in the prior few days. What you want to be familiar with is how are these numbers coming together? So if you know your numbers, you know your business, but if you know your numbers, you then can tax plan and then tax strategize, because many small businesses, it's easy to lose sight of this, but typically taxes is one of your biggest expenses, maybe outside of payroll and rent or cost of goods sold. And many, for an S corp or a partnership or a sole proprietor, those taxes, because they're individual taxes, they don't show up as a line item on your income statement. So we can easily lose sight of that. So anytime I'm visiting with a client and we're doing all these steps, part of what we're also looking at is the line item that's not on the income statement, which is that tax to plan for and strategize. Now, if I'm logging into a client, I'm doing all these same steps. And then if I'm talking to them on the phone, we're going through all the same reports and doing these things. And what I have found is just in that, those simple steps of looking, sifting, showing the client what to look at, sifting through with them, planning, strategizing, asking questions, that it seems as though it's easily built wonderful relationships over the years. And I'm more familiar with my clients over time. They're more familiar with their numbers over time that make them easily better business owners. All right, so there it is in a nutshell. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.
American CPA. CPA. K.